Good morning, good afternoon, good night. Welcome back to another schema scalper video. In today's video, we're going to be looking at fair value gaps and how to use and apply them. First of all, what is a fair value gap? So it's an area in price where there's a 3-candle pattern. So it's 1, 2, do it over here, 3 candle pattern. Boom, 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 and this is the simplified version. So it's a 3-candle pattern where there's only being given one direction for either buying or selling, and I'll explain what that means, and we'll go into the chart and find some and show examples. Oh, that's terrible. Yeah, guys, let's put that there. I'm doing this all without the mouse, that's why it's so straight on the trackpad. So I'm not worried about the bottom and the top for now. These weeks we're only looking at this. So the body of the candle is red candle body. Equals sell. Red candle body equals sell. This is not always the case. There's sometimes when it'll go through this level and come back and then sell off. But for now, if you're keeping it simple, this is what we're looking at. Red candle body sell, right? So it'll be first candle makes a low, second candle goes up into the first candle. Let's make the body a bit smaller. Let's make it more realistic. First candle goes up into the second candle, or it could go down immediately and close wherever it closes. Third candle opens and then goes up, and the high doesn't reach the first candle's low. So this low and this high doesn't meet. So that indicates that there was only selling allowed during this time. So price would want to go back into this area to fill it in and then come further down. That's the idea of this pattern, right? And now for buys, I'm just gonna I can't clone everything. Okay, I'm just gonna do it again. Now this one would be green candle. It doesn't matter the first and third candle's color, that's why I left it both gray. Move it down here. So right here the first candle's high doesn't meet the third candle's low. Okay. And green body equals buy. For now, okay, let's say candle body as well. Green candle body equals buy, right? This is just a general rule and it works most of the time, right? But for now we're going to keep it simple and I'm going to use this because yeah, this works most of the time. Price will usually come back and then push higher off of this area where there's only buying. Right? Now this on its own is good, but having narrative behind it is what makes this work and what makes it amazing. So if you guys have a keen eye, you'll see up here my other tabs that are open: British pound futures, seasonal chart, and US dollar index seasonal chart, right? So we're gonna mix this pattern with a directional bias, which means during this time, whatever time we're going to choose, we're going to look at only one direction for range expansions and for this fair value gaps. And we're going to see how they react to them. And you guys will see this stuff actually works if you understand what you're doing behind the scenes. Like, I can show you this and I can be like, oh, I sold here because this is here, but it's not only because that is here, because there's a seasonal tendency behind it, there's a trend behind it, there is other supporting factors, like maybe the high or low of the week is formed yet at this time. So there's more factors behind this pattern and supporting the idea that this pattern is going to work. So we'll just look at, okay, that's already boom. I'm just going to do a quick look at seasonal charts. I'm going to use this pattern in price. September, let's use September till January and we'll narrow it down. So we're in seasonal charts for pound futures, September to January. Let's do this. September is over here. August, September. So I can see immediately October is making a low in pound futures. So middle of September creates the high between September and the end of October. Let's see, there's something similar in dollar, similar but reversed. So middle of September makes the low, and then end of October makes the high. Middle of September makes the low. I'm sorry, middle of September makes the high, start of October makes the low. And in this one, the end of October makes the low. So we're gonna cut it back now to middle of October till from start of September till end of October. We're gonna use that range, but we're gonna be focusing on the middle of September until the beginning of October, because that's when the high and low of the seasonal charts are made. And we are going to be only looking at selling. So start of September, mark it out horizontal line. End of October, another horizontal line. And now we're going to look at all fair value gaps with a red body. Here we go, here's one. So this low, this thinner, and this high doesn't meet up. So that's the area of selling if it gets back to that price. And we're going to look at every candle one by one. This low and this high meets up, it's fine. Now there's a gap inside here. So in that gap you could be selling, looking for the next gap. No gap, 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 no gap. Oh, here's a gap, sorry. Now here's another gap. Here's another gap. Here's another gap. Here is another gap. So what you'll see now is that here, the middle of September, we're expecting the high to be made. It doesn't go up to the high of the beginning of September, but there's still a gap inside here, and there's a re-entry into that gap, and then push down as we go on all the way up until, I would say that's about the second week in October. So let's look at October. So that's first week of October, second week of October, until there. Second half of, so that's the second week. Monday, Tuesday, Wednesday. Monday, Tuesday, Wednesday, Thursday, Friday. Right? So in between this range, you'll be trusting these gaps to hold and to push price lower. So up here, so now we've got the context first of all, which is actually the most important thing. We've got the context, which is the seasonal tendency, and we've got the pattern, which is this, in the direction that we're looking for. So we're only looking at red candles with this gap, and you can see it up in here, trace back into it here, trace back into it here, over here it went through, so it traded and it didn't go back lower. And this happens, guys. Trading is not 100%. That's why there's risk involved. So majority of the time you see the return into these gaps as pushing price lower. So we've got 1, 2, 3, 4, 5, 6 gaps made in the area of, oh wait, I didn't count everything. 1, 2, 3, 4, 5, 6, 7 gaps made from November 1st, or from September 1st to November 1st. And that's only down gaps that we're looking at, or fair value gaps with red bodies. Right, now in this time when there was 7, we can see that it didn't trade back to 1, 2 of these gaps during the time period, and it disrespected 1. So we've got 2 that's not traded to. Let's actually put this down. 2 not traded to. We've got 1, 2, 3, 4. 4 that worked. Let's say worked like this. Worked. And then 1 that didn't work. So during this range in price, we have a total of 7 gaps, 2 not traded to, which is fine. We don't always expect it to be traded to. Sometimes there are gaps that are left to be left open. And as you look more into these concepts of candles not overlapping and touching each other, you'll realize that certain things mean certain things. I'm just trying to make it as basic as possible, but there are times when the law of the candle might be how do I say this? The law of the candle that makes the fair value gap. If there's a close below that low, it might mean something. If you're looking at the 3 candle pattern and the 4th candle is perfect, that means something. Like for instance over here, that's perfect. That means something. That means on this side, once we're hitting buying, this area is now an area of buying instead of selling. It's going to be a bit confusing in the beginning to understand this, but once it breaks the high of this candle, we're now getting into an area of buying instead of selling. Yeah, and now but understanding that 4 worked, 2 not traded to, 1 didn't work. So in total you have 5 tradable opportunities if you had to trade the daily chart. With these ideas in mind, 5 tradable opportunities, 4 would have came out as, I'm not going to say winners, but let me use that word, successful as a pattern. 4 came out successful as a pattern, 1 didn't. So if you're looking at a 1-to-1 risk reward, you now, well, let's not do that. Let's look at actually entering the top of these ranges. And stop above the swing high, targeting 1-to-1, because it is a daily chart. This one worked. Stop is at the swing high, targeting 1-to-1. This one worked. Stop is at the swing high, targeting a 1-to-1. This one failed. Targeting the swing high. 1 to 1. This one failed. Not ready to. Stop is at the swing high. Targeting a 1 to 1. This one hit. Now you can see the targets that I'm setting is not massive numbers as targets. It's just to get you into the concept of understanding that these moves happen, and it's easy to see a 1 to 1, and going into a low time frame you can get that higher R multiples in terms of risk to reward. But for this we've had what, 1, 2, 3, 4 winners. No, sorry, 3 winners, 2 losers. So we're at 60%, which is enough to be profitable on a 1 to 1 strategy with high enough frequency. With that being said, I hope you enjoyed the video. If you're looking into these kinds of patterns, I'll give honorable mentions, not honorable mentions, I'll mention people who I learned by, and also I've had a lot of my own study. So ICT, Inner Circle Trader, there's actually only 2, and they and rjo.io. They're both on YouTube. You can go and search their names. They'll explain more in-depth if you want to have a more in-depth view on these candle patterns and things. But just remember, context is the most important. If you understand we're going into a seasonal trend, if you're understanding that we are at the high or low end of a weekly range, and you're expecting something else for the week, if you understand that commitment of traders report is saying something, if you understand that the open interest is saying something, if you understand any of these things, these concepts will start working. Support and resistance ideas will start working, trend lines will start working, everything will start working if you understand why, or the movement behind price. And with that being said, cheers.